Hello, and thank you for tuning in to the first ever episode of Evolve Business with Boatema. This is such an exciting day for me because I see Evolve Business as an exceptional opportunity for more businesses and business owners in Ghana to get practical legal insights about growing their businesses in Ghana. Are you an entrepreneur in Ghana, or are you interested in becoming one? Do not be blindsided by the tax incentives available to your business in Ghana. Today on Evolve Business with Boatema, we are going to be discussing tax incentives for entrepreneurs in Ghana. This show is proudly sponsored by Chic by Siba. Chic by Siba provides Afrocentric clothing and accessories, all made right here in Ghana. Good evening, and my name is Boatema Boating. Joining us virtually today is a very special guest, Dr. Nakyea Abdallah. He's a seasoned lawyer, a tax practitioner, and a senior lecturer at the University of Ghana. And of course, my very own lecturer. Hello, Dr. Nakyea, and welcome to Evolve Business with Boatema.
Thank you, madam.
Doc, so we are going to start with a letter from one of our viewers. So I'll read the letter first, and then we can dive into our discussion.
Okay.
All right. Dear Evolve Business, my name is Elom. I am a 28-year-old graduate. About 2 years ago, I started a fish farm in Akusi. During our peak harvest seasons, we are not able to store almost 40% of our produce due to limited storage facilities on our farm. A friend recently introduced me to a foreign national who is interested in investing in my business. If everything goes well with the investment, we can expand our storage facilities and even venture into canning some of our produce to reduce the wastage. This potential investor wants to know the following. 1. Are there any tax concessions for a fish farming business in Ghana? If yes, what are some of the key ones? And 2, what are some of the key tax incentives for a foreigner doing business in Ghana? So, Doc, I think we should start with his first issue, whether there are any tax concessions for a fish farming business in Ghana. If yes, what are some of the key ones?
Thank you very much. I think the area of fish farming has an incentive. Initially, it used to enjoy a tax holiday of 5 years, meaning when you start for 5 years, you will not be paying taxes. But the Internal Revenue Act that contained that provision was amended. We now have the Income Tax Act 2015 at 896.
That's right.
And what it has provided for is that during the first 5 years, you will be paying only 1% as your tax, instead of the existing corporate tax of 25%. And also looking at the age she mentioned, 28 years, there is an incentive for her because the tax incentive for any entrepreneur who is 35 years and below are provided for in the Income Tax Act. Indeed, they've indicated the areas. If you are into manufacturing, you are into ICT, you are into agro processing, because I can see she has the plans of canning the fish, and that will put them under the manufacturing. And then also waste processing, tourism, horticulture, and medical plants. So definitely at the age of 28, she qualifies for the 5 years exemption provided for entrepreneurs who are engaged in these sectors. And interestingly, after the 5 years exemption, depending on her location, the tax rate applicable is also reduced. It's 15% if the business is in Accra or Tema. And after the 5 years tax holiday, your tax rate is reduced. You are not paying the certain corporate tax of 25%. You'll be paying 15% if the business is located in Accra or Tema. If you are in the regional capitals other than the previous 3 northern regions, now they have Savannah and all that, you'll be paying 12.5%. And if you happen to be in the former 3 northern regions, then you have even a reduced rate of 5%, whereas in any other area it is 10%. So these incentives exist for young entrepreneurs, and I believe she qualifies under that.
Okay, Doc, I need some clarification on what if you qualify under more than one of these incentives, what will happen? Will the law allow you to benefit from all of them at the same time?
It would, because the qualifying criteria is you being 35 years or less, okay, and venturing into entrepreneurship.
Right.
So all the sectors that have been listed to be supported, if you are in them, you would have 5 years tax holiday to enjoy when you engage in them. And after the 5 years, depending on your location.
Right. So, Doc, this is just an aside. So, apart from these tax concessions for fish farming businesses in Ghana, are there any other tax concessions even before we go to our second issue for the day?
Yes, there are a lot of concessions that have been provided in the tax law. Apart from fish farming, if you are into cash crops, you also enjoy the 5 years. Because remember, we mentioned horticulture.
That's right.
If you are into tree crops, then yours is 10 years.
Interesting.
For the 10 years, you'll be paying only 1%. If you are into cattle rearing, you have another 10 years, and that is only 1%. So that is the agri segment. All businesses, irrespective of whether you are into fish farming or agri, you can carry forward losses for 5 years. But if you are in the priority sector, which has also been listed in the income tax regulations, the priority sector, manufacturing, ICT, mining, petroleum, then you can even carry forward losses for 5 years, but all others 3 years. But as an entrepreneur of 35 years and below, engage in these listed areas, you have 5 years carryover of losses. It means that you are given enough time to establish, because we all believe that at the initial stages of a business, you may not break even immediately and start making profit. So the losses that you would incur at the startup stage, you are allowed to carry it forward to the years you make profit, and then you take it out. If there is anything left, then you pay the tax. If there is nothing left, that loss is also carried forward for up to the 3 or 5 years as applicable. Then you can find your feet before taxes start being levied on you.
Right.
So the incentives exist.
Doc, if you say carry forward losses, for the sake of our viewers, can you kindly clarify what you mean by carrying forward losses for up to 5 years?
Thank you. When you are in business, we will take your total income that you've made for the year, and then the expenses are taken out. When the income exceeds the expenditure, said you've made a profit or a gain. Where your expenses exceed your income, then you are said to have made a loss. Would allow you to the full year with it. And if you make a profit in the following year, you would have paid tax. So before the tax, can we allow you to set off the previous year's losses?
Okay, right.
And let's take year 1 of 1 million. You incurred expenses of 1.5 million. So in 2020, you've made a loss of 500,000. The law says when we come to 2021, you make sales of 3 million. Your expenses were 1 million. Now you've made a profit of 2 million. You were to pay 1% on that. The law says, wait a minute, last year you made a loss of 500. Deduct it from the 2 million profit. You are left with 1.5. Pay the tax on the 1.5. Supposing the second year being 2021, you again made a loss. You know that you added to the previous one and continue to the third year. But after the third year, if it doesn't happen that you're able to make a profit, the loss is extinguished. You can't move it forward again.
Okay.
So we call that in taxation, there is a sunset clause. You can't continuously be carrying forward. But each year you make the loss, the 3 years start counting from that year.
3 years.
So it is not all to be deducted within 3 years of starting your business. No, it is 3 years from the date or the year the loss was incurred. So 2020 loss can be set off against income in 2021, 22, 23. So it means it ends in 23. If you couldn't recover the loss in 24, you can't do that.
Right.
But the one you incur in 2021 starts counting 2022, 2023, 2024. The one you would incur in 2022 starts counting 2022, 2024, 2025. So that is how the loss carry forward is determined.
From our letter, it appears Elom says that he's not able to store almost 40% of the produce. So if I understand what you're saying correctly, assuming he's made a loss because of the inability to store his produce, you're saying that he has 3 years to carry forward that loss, right?
Yes, he can carry forward that loss to reduce any tax that will be waiting in the future.
Okay, for 3 years, right?
Yes, for 3 years.
Right.
And as I indicated, once they are planning to look at the canning of the fish, that will be value addition, and it will be counted as part of the manufacturing process. Then here they become a manufacturing business, and they can carry forward losses for 5 years, not 3 years. So it enhances their incentive that can be available to them.
Right. So Doc, he says he's already been in business for 2 years. Does it mean that if when he starts paying the tax, or if he wants to carry forward his losses, it will be reduced by the 3 years? Does it mean that he will have just 1 more year?
No, because if he's been in business for the past 2 years, remember this law was in operation 2016.
That's right.
So it means at the time he started, the law is even there and available for him. He only needs to take advantage of the provisions of the law.
Right.
Yes, it did not just start. It's been with us since 2016.
Interesting. Thank you, Doc. So let's move to the second part of our letter. He's asked the second question, and I'll just read it. He says, what are some of the key tax incentives for a foreigner doing business in Ghana?
Okay. Interestingly, when you look at the tax incentives, they are given based on the activity the business or entity is engaged in. It does not distinguish between a foreigner and a Ghanaian. And that is why we keep pointing out to Ghanaian investors that all the incentives they see, they hear, they qualify for it. It's about taking the appropriate steps, processes to take advantage and benefit from those incentives. What happens in the case of the foreigner is that because he is coming in as a foreign partner, he will come under the Ghana Investment Promotion Center Act. And the Ghana Investment Promotion Center Act has set out a lot of incentives available. For example, the repatriation of his share of profits of the business without any problem, because all he needs to show is that whatever taxes are due on them have been paid, and there will be no restriction, because the inflow of the funds to set up or to partner Elom would have gone through the banking process. The Bank of Ghana would have recognized it. He has documentation to show, and that is why repatriation will not be a challenge. And so the incentives available to him as a foreign investor includes also the protection from any expropriation.
Right.
So that if there is in any event there should be an expropriation for the national interest, then of course he is entitled to adequate and prompt compensation. So those are provisions that the Ghana Investment Promotion Center Act gives as a guarantee to a lot of foreign investors. And so apart from that, all other incentives depending on the area of the activity they engage in would also flow and inure to their benefit.
It's interesting to know that under the tax laws of Ghana, the tax incentives are not nationality or citizenship based, and that
Correct.
irrespective of whether you're Ghanaian or not, you can benefit from it. It's actually comforting also for Ghanaian, a lot of Ghanaian businesses who do not know that. And I like the fact that you mentioned the Ghana Investment Promotion Center Act too. The fact that it comes with expropriation. A lot of the concern that we see is the fact that they have to meet minimum capital requirements and other things. But I think that will be taking us to a different dimension than our subject today.
But it will help them to understand that anytime they read of the minimum capital requirement, what they forget to realize is that it's not only in cash. It's both cash, goods, equipment, and whatever it takes to set up. So depending on the area, for example, with Elon's case, you are going to veer even into canning of fish. Yes. The value of the equipment you would require, the materials to be able to can the fish and put together would exceed even that value of minimum capital requirement. So when they start thinking of it as the fiscal cash, that is when it sounds a bit destructive. Yes. But it is not only in cash, also in the value of equipment, goods, and all you need is the documentation to show that this is what is coming in as my investment into the project, and then it will be valued and you will qualify.
Thank you very much, Dr. Nakyea. One more question for you is, a lot of businesses are watching us today. They want to know what they should keep in mind when it comes to taxes in Ghana. Do you have any advice for businesses, briefly?
A lot. A lot. I keep saying that the first line of reducing your tax is to comply with the tax law. Because if you look at a lot of liabilities of businesses, it happens to be in such a way that the penalties and interest imposed on them for non-compliance with the tax law most of the time exceeds the actual tax liability they owe. So the issue of non-compliance, for example, the tax law makes all of us agents of the Commissioner General.
Right.
If we are paying any person for the supply or sale of goods or services, we are required to withhold tax and pay over to the Commissioner General. If it is supply of goods, the law says we should withhold 3% and give to the Commissioner General. You give us a tax credit certificate, we give it to the person to show he has paid part of his taxes up front. If it is works that has been done for us, the withholding tax rate is 5%. If it is services, it's 7.5%. Now the liability is this. The law says if you fail to comply with the withholding provision, the Commissioner General is empowered to surcharge you with the tax you should have withheld. So you can imagine you've paid somebody, the withholding tax was about 50,000, you did not withhold, and you are being surcharged. You've already paid the person. So it becomes an additional cost to you. Although the law makes provision that you may recover from the person. But that would happen if you are still dealing with that person on a regular basis. So it makes me believe if you comply with the law, you first step avoid or eliminate some unnecessary taxes, because the interest and penalties are also taxes. Because the law says that the Commissioner General shall treat any interest and penalty as taxes and collect them in the same way as you collect taxes. And so we see it as part of taxes. And it is no wonder that because of the COVID, government gave a directive and then a law came out to support that policy directive that any person who has any outstanding taxes on which penalties and interest have been calculated or yet to be calculated, you have up to end of this month, June, to apply to the Commissioner General for waiver of the penalties and interest. And then to qualify, you need to take steps to pay the tax liability outstanding. And I've encouraged people to pay up the actual liability and make the application for the waiver. Indeed, the law says if you are not able to even pay, or you can make arrangements on how to settle, and then we would all save a lot of taxes. So what is of concern to me is that we have barely 2 weeks to go to the deadline for the penalty and interest waiver. So all businesses, all taxpayers, please look in your books, look at what you owe, and make arrangements to settle and apply for the waiver of interest and penalty. The other one is to keep good records. Because when they are to do any tax audit, they are looking at the records available in your premises. A lot of us may spend and we don't collect the receipts to support that expenditure. So all we see is that we have income. Of course, when they are assessing you, there will be no expenses to reduce your income, because taxes are on gains and profits. So if you are not making a gain or a profit, you are not to pay tax. But how will we know whether you've made a loss or a gain? It's the document. So if you don't have receipts to show, even when you are buying fuel, its cost of operation, take the receipt. You are paying for phone bills, credits to load onto your phone, to make calls, to contact customers. The credits you keep scratching, don't throw them away. They represent expenditure. You need them. And then we also have capital allowances the revenue is giving to us. These are allowances that are calculated based on the assets you've employed in your business. A percentage of it is given to you to reduce your profit before you pay tax. We call them capital allowances. If we don't keep records of our assets we've employed in the business, we will be losing these allowances that could help to shore up. And then there are incentives like the recruitment of fresh graduates, especially for small and medium scale enterprises. We don't have a very large staff number. And depending on which composition are fresh graduates, you get a reduction of your income by the percentage of fresh graduates that you employ. If they form 30% of your workforce, there is the reduction you get. If they form 50% of your workforce, and interestingly, fresh graduate includes what I call brand new second hand. It does not matter you were working and you went for further studies and you are back. You are a fresh graduate. So where we have even assisted some of our staff to have gone for further studies, they could be working and studying in the evening. Once they get the certification, they are fresh graduates. And you should be taking that advantage of the reduction in your expenses. Well, a percentage of his salary already allowed as an expense is added to you to reduce your cost of, because government's policy to try to get businesses to assist in reducing the unemployment gap. So you see, taxation is not only about collecting money, because government is collecting the money to create the jobs. So if you can help government by creating the jobs, government is saying, let me assist you by giving you also an incentive. So there are a lot of incentives in the tax laws. We just need to get an advisor, a consultant. We have members of the Chartered Institute of Taxation, chartered accountants, lawyers who have learned taxation. They will guide you that this is available for you. Why don't you explore this opportunity? Just as you are doing for us, a wonderful platform for us to share and guide people to know where to look for what. And then
thank you,
we'll
Doctor.
see that doing business is not difficult in this country.
Thank you so much, Dr. Nakyea. It has been so insightful. We wish we could go on and on and on. Viewers, thank you so much for joining us for today. And I hope you've learned a lot from Dr. Nakyea. He says, make sure you are complying, make sure you are keeping good records, and do not be blindsided by the available tax incentives and tax concessions. You may never know what is applicable to you. Speak to the right people and know what is applicable to you. Thank you very much, Doc. Thank you, and thanks for your time. Enjoy a wonderful evening. Hello, my name is Boatema Boating. Thank you for joining us on Evolve Business with Boatema. Subscribe for exclusive full episodes of Evolve Business with Boatema.